Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Mackintosh, chief economist at Nasdaq, to review what happens to a company's stock when it's added to the S&P 500, just like Tesla recently announced that it will be going into the index. And Phil, this has been quite the topic with traders and investors. The performance that Tesla's had, that of course it had a split this year, and now it's moving into the S&P 500. That's quite a lot for the stock.
Yeah, and the S&P 500 edition is kind of a big deal because it's the most popular index for index funds, for large cap index funds at least. The expectations are that about 12% of the shares outstanding, or at least the float shares outstanding, will need to be owned by indexes come close of December 18. So it's a pretty big trade. But I think it's important to keep in context that every time S&P adds a company to the S&P 500, about 12% of the shares of each of those companies need to be owned by index funds at the add date. So this is kind of normal. It's just that Tesla is a really big stock. It's one of the biggest additions ever to the S&P 500. It's definitely the biggest by dollars and market cap, but it's actually not as big as when by weight as when Berkshire Hathaway was added years ago. So the reason for that is the way S&P's rules work. They wait for companies to become profitable before they typically start to look at them for inclusion in the index. So Tesla is already in the MSCI and the Russell indexes. This is kind of the last index to be added for Tesla, but it's a big one.
And how do stocks typically perform after they've had, in addition to S&P 500?
Yeah, so there's plenty of academic research on this, and there's some research from broker dealers as well. And what you tend to find is that being added to the index is a good thing. And for the S&P 500, because it's a pretty big deal, it's got futures that track it, it's got big ETFs that track it, it's got a lot of index funds that want to buy it and active funds that will probably want to buy the stock at some point as well. You tend to see a premium once you get added to an index like the S&P 500. And research typically shows for the S&P 500, it's about a 5% premium that tends to persist even 30 days and longer afterwards. So it's basically a liquidity premium. For being added to the index, you're going to have more liquidity, you're going to have more investors, so your cost of capital goes down and your valuation goes up. But importantly, when you look at that research, the actual premium tends to get built in as soon as it's announced that it's going into the index. And as you said, the announcement came a couple of weeks ago. So the fact that the trade date is on December 18 probably doesn't matter as much as the fact that the announcement was back in November 16. So the news is out, the market already knows this, and it's probably priced in most of the benefit already.
All right, let's switch gears here and talk about some economics. And I guess the question is COVID-19 really slowing down the economy or not? Because as we spoke about yesterday, the data has in fact been surprisingly good.
Yeah, and we talked about the PMIs yesterday. So today we've got a chart just looking at the attribution of what's driving the PMIs. And obviously PMIs are producer and manufacturing indexes. So it's the goods side of the economy. And we know that goods are doing well and services are doing badly. But the PMIs just keep looking expansionary. You can see that from the chart. Any metric over 50 is expansion and growth. And employment is starting to drag just a little, but not much on the good side. So new orders, the drawdown in inventories are all contributing to the fact that the manufacturing side of the economy is actually still pretty strong. And there's obviously a lot of spending out there and a lot of people going and buying goods and keeping that part of the economy going.
And Phil, let's wrap up and talk about pandemic pressure on workers returning to the office. Certainly that's top of mind for everyone, and it's taken somewhat of a downturn.
Yeah, so that's where you start to see some, I guess, of the services impact in the economy too. It's anything where people are going to be seeing each other face to face and in close proximity, doing things that we know are a bit more risky, have really struggled to recover. And so going back to the office is one of those things that it cratered to below 20% of normal levels, and it really hadn't recovered much above about 25%. And with all the new coronavirus wave coming through America, that's taken a dip back down below 20% pretty quickly, actually. So you can see people's behavior changing. You can see that people's behavior has not come back to the office in any way, shape, or form. And it just highlights, at least to me, that humans will protect themselves regardless of what the policies are in the government. And that's one of the things that's affecting the services side of the economy. And it's why a lot of economists, including the Fed economists and Mnuchin, are quite worried about the next 4 months with winter and coronavirus cases increasing.
Well, Phil, it's going to be interesting once we get on the other side of this, because it was relatively easy for us to pivot and go to our homes in early to mid-March, right? But then once the vaccination is available, I'm curious to see what workplace return plans will look like. I think it would be really challenging to the infrastructure and just from a health perspective as well, getting everyone to pivot and get back. I would imagine it'll be more done in stages.
Yeah, and I think one of the things a lot of economists are looking at is the closures of small businesses. I saw some data this week that showed that bankruptcies are actually coming down, which is a good sign. But there's other data that we looked at earlier this week, just looking at small business closures. Hopefully that doesn't lead to businesses disappearing completely, because that's going to be much harder to ramp back up, even if we're all safe to go back and work together.
All right, Bill, thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.